Federal government reopens runway at Abuja airport. Global stocks rise while European markets remain muted with traders in the zone and bank holiday. On commodity watch, gold prices flat as traders gear up for U.S. inflation data. Plus oil prices climb as recession fears begin to fade. This is Business Express on the network service of the Nigerian Television Authority, the NTA, and we're reaching you from Abuja, the nation's capital. I am Leah Katun Babatunde. You're welcome. We begin with news that the Nigerian International Airport is now open for operations after a temporary closure Sunday. The closure was as a result of an incident that involved MAX aircraft. Ministry of Aviation Hadi Serika says the affected aircraft has been towed away. The runway has been swept, inspected and certified for operation. The minister regrets the inconvenience and also thanked customers for their patience. The federal government says more than 2 million people and firms across the country have so far benefited from the Nigeria COVID-19 Action Recovery and Economic Stimulus (NGCARES) program within its 1 year of full implementation. Minister of State, Budget and National Planning Clem Agba made this known at a ministerial town hall meeting with stakeholders in Abuja, where the World Bank approved the extension of the NGCARES program by 1 year to allow for increased drawdown of the credit.
The federal government once again wishes to restate its commitment to restoring the livelihoods of poor and vulnerable Nigerians, maintain food security and facilitate the recovery of MSMEs. The NGCARES program is one of the policy options explored by our administration to achieve these objectives.
That is why just within the space of about a year, less than a year of full implementation, we are able to generate results worth 77.2 billion naira. So I mean, this is spectacular and it is a landmark achievement.
The initial challenge was that of making people to believe that it was possible. You know, at the beginning, as chairman of the technical committee, people were thinking is another 419 has come, another government project has come, and nothing was going to happen. But this one, we delivered.
The IMF in its regional economic outlook for sub-Saharan Africa posits that Africa is being hit by a funding squeeze as persistent global inflation and tighter monetary policies have led to higher borrowing costs. These have combined to place greater pressure on exchange rates, and for context, no country in the region has been able to issue a Eurobond since spring 2022. How is this financial gap affecting the region that is already struggling with elevated macroeconomic imbalances? What are the implications for growth and integration, especially with the coming into effect of the Continental Free Trade Area? Wenji Shem is a Deputy Division Chief of the Regional Studies Division in the African Department, as well as Mission Chief to Mali of the International Monetary Fund, the IMF. She joins me virtually from Nigeria's commercial city, Lagos, to share insight on the regional economic outlook of sub-Saharan Africa presented last month at the spring meetings in Washington, D.C. Thank you, Wenji, for joining me this afternoon.
Very much for having me.
Great. We started looking at the funding squeeze. Could you put it into context? What exactly is before the region?
Essentially, many African economies are facing higher borrowing costs, and this comes from the higher interest rates that we have in many advanced economies, which was precipitated by the Russian war in Ukraine and the rising costs in terms of prices. And at the same time, sovereign risk spreads have spread, virtually cutting off all frontier markets from the Eurobond market since the spring of 2022. And lastly, the appreciation of the US dollar to a 20-year high last year, in fact, has raised the external debt service costs of many countries in the region as well.
We saw the IMF inject more than 50 billion US dollars into the region during the pandemic, 2020 to 2022 precisely. Where did the money, where did it go to, and what gaps did the funds plug?
So there are several categories in terms of the funding that the IMF has supported African economies during that time period. The vast majority was in terms of lending, and in that scenario we had a lot of rapid facilities, emergency financing, and other programs where we helped many economies in terms of supporting their shortfalls in budgets. And then secondly, there was also the special drawing right allocation, about $23 billion that was allocated for countries to weather those shortcomings in their budgets again during these very hard times. And then lastly, there was debt service relief, which was financed by the Catastrophe Containment and Relief Trust.
So we're having another situation in our hands, that is Sudan. So fundamentally, what is the policy advice for the region to mitigate the funding squeeze and associated problems?
Essentially, now that external financing sources have decreased significantly, the countries have to now look inwards in terms of raising the funds to cover their expenditure. So what that would imply is, in terms of fiscally, there needs to be more domestic revenue mobilization, and then on the other hand, in terms of spending, governments have to be very efficient and looking into whether these spendings are exactly where they get the return that they need.
So looking at those returns is something that, of course, a lot of people on the continent will be are paying attention to. Where is the spending going to, and if it's bringing any returns at all. But then Africa has been on a course to deepen trade between member countries. What is the position of the fund about the AFCFTA?
We absolutely support these efforts of the African Continental Free Trade Area, and this is potentially a very, very large opportunity for African countries to gain in terms of the benefits from trading with each other, in particular by lowering tariffs and by making it more conducive to trade within the continent between countries. African countries can gain in terms of the median goods trade by over 50%, and also in terms of services trade there could be gains up to 50%.
Yes, I would want you to speak about the barriers to trade. What will you say are the quick wins for the region with proper policy support for the implementation of the AFCFTA?
So in terms of the average African country, the trade barriers are relatively high compared to those in other regions in the world. And for instance, 6% in terms of just tariff barriers and 18% in terms of non-tariff barriers. And by lowering those, African countries can gain in terms of trading with each other, in terms of goods trade, services trade, along with better utilization of digitalization, as well as in terms of the infrastructure and trading. This can all create jobs, which is much needed in this very demographically dynamic region, where essentially 20 million new entrants into the labor force come in each year, and so where by 2035 we actually estimate that each half of the entrants into the labor force come from this continent.
Oh, that's some statistics there. And before I let you go, perhaps you could throw some light. Where do you see this population going to? Where do they fit in a changing world?
I think the world is changing, as you said, and in terms of for Africa, there's a lot of space still to explore in terms of services. What we have seen in terms of digitalization, it includes financial inclusion, there are vast opportunities for this large market here in Africa, especially in Nigeria as well. And so there are many opportunities to explore. And with a young and dynamic population, this presents great opportunities going ahead.
I must sincerely thank you, Wendy, for spending this time with us and for your insights. And I wish you a beautiful stay in Nigeria, and I hope you get to eat jollof rice and pepper soup before you leave.
Thank you so much for having me. It was a pleasure.
Great. Have a nice one. Still on commodities, the COVID-19 pandemic, the war in Ukraine, and the most recent war in Sudan have led to long-term disruption in the global supply chain. The IMF in its Ukraine-Argentina supply chain briefings suggest refocusing on the supplier selection process as it urges policymakers to continue to communicate clearly their plans for inflation and monetary policies.
Emerged that inflation will be high over the medium term, and there is a tangible risk of inflation expectations de-anchoring. I say if. Central banks may be forced to react even faster than currently anticipated by raising interest rates.
On the energy market, oil prices rose this Monday as fears of a recession in the U.S., which drove prices down for 3 weeks in a row for the first time since November started receding. Brent crude futures were up 43 cents at $73.73 a barrel in early trade, while U.S. West Texas Intermediate crude futures were up 45 cents at $71.79 a barrel. Gold prices were listed on Monday as cautious investors awaited a key U.S. inflation data due this week that could influence the Federal Reserve's monetary policy stance. Let's now see the prices for the commodities in the global market. The NGX All-Share Index rose by 0.12% in the week ended May 5th, 2023. Moplang de Cork has details of the week's trading activities.
The stock market in Nigeria opened for 4 trading days in the trading week ended May 5th. Despite that, the equities market rose by 0.12% in the week amid sessions of profit-taking and bargain hunting activities. The NGX All-Share Index closed the review week at 52,465.31 points. Market capitalization appreciated to 28.5 trillion naira. All other indices finished higher with the exception of NGX Main Board, NGX 30, NGX Merry Growth and NGX Growth indices which depreciated, while the NGX ASM and NGX Sovereign Bond indices closed flat. The financial services industry measured by volume led the activity chart with 1.4 billion shares valued at 14 billion naira traded in 13,115 deals. The conglomerates industry followed. The third place was occupied by the consumer goods industry. Trading in the top three equities, Transnational Corporation, Access Holdings and Fidelity Bank, accounted for 2.074 billion shares worth 11.2 billion naira in 5,966 deals. 51 equities appreciated in price in the week. 26 equities depreciated in price, while 79 equities remained unchanged.
Thank you, Muplang, and let's bring you up to speed with opening week's results from the NGX. This Monday, stocks advanced marginally to see the all-share index rise to 52,579.52 points. Total volume of trade stood at 511 million, valued at 7.139 billion naira in 5,883 deals. Equity capitalization ended the session at 28.629 trillion naira. The banking stocks dominated activities today and were topped by Access Bank, FBN Holdings and UBA. And away from home, European stocks muted as traders digest rate hikes, just as Asian markets largely rise after Wall Street rebounds on Friday. Buster Evil has more on the global market.
Market players have spent weeks juggling concerns over inflation and interest rates, with Bank of England due for a rate-setting meeting on Thursday. Both the Federal Reserve and the European Central Bank hiked rates by 0.25 percentage point last week, with many now expecting the former to start cutting rates at some point during the summer. European indices started the trading week on a flat footing, with traders looking ahead to a more corporate earnings, economic data and a Bank of England rate decision this week. Asia market largely rose on Monday after Wall Street snapped a 4-day losing streak Friday. In mainland China, the Shanghai Composite led gains in the region and gained 1.81% to close at 3,395, the highest level since July last year. The Shenzhen Composite closed 0.4% higher at 11,225.77. Hang Seng Index also topped 1.24%, while Japan's Nikkei 225 fell 0.71% to end the day at 28,949.88. U.S. stock futures were little changed Monday as investors looked ahead to a key inflation data released later in the week. Futures tied to the Dow Jones Industrial Average climbed 41 points. S&P 500 futures were flat, while Nasdaq futures lost 0.08%. It was a mixed trading session for African markets, with South Africa's GSA Africa Top 40 posting gains, while Namibia's overall index dipped 0.08%. Bosede Able, Business Express.
Thank you, Boss. Today we move to the currency market and we start by informing you that the Central Bank of Nigeria at the end of last week injected over $25 million into their excess account. And so let's see how that is panning out with traders this Monday. And indeed, the markets are smiling this Monday. Let's go on a quick break, and Business Express will return shortly. Now, if you or your folks are into any pension scheme in the country, this might interest you. Pensioners in Nigeria are being sensitized against the antics of fraudsters in pension administration in the country. These dominated the stakeholders' engagement in Akure. Toyin Battery reports that the Pension Transitional Arrangement Directorate (PTAD) says this is in line with its determination to keep pensioners in the Southwest abreast of development with the old pension scheme and resolve payment challenges.
Periodically, the Pension Transitional Arrangement Directorate organizes stakeholders forum to update pensioners on the activities of PTAD and future plans. The journey from field verifications and mobile verifications to putting together a solid database of pensioners, benefit computation, ensuring the regular payment of monthly pensions, and paying long overdue pension arrears to pensioners are some of the PTAD core mandates. Excited pensioners who spoke with NTA crew say PTAD has taken them away from being beggars.
There was slow owing of pensioners by PTAD in the past, but this one improved better. Pensioners in the past were made to go through rigorous and tortuous screening processes that has led to the death of some pensioners who are not sound. But this particular device will now makes it possible for pensioners to do screening in their own homestead.
Executive Secretary of PTAD, Chema Echikeme, said giant strides have been made and will not relent in ensuring that pensioners no longer go through stress to access their funds.
They are a life contribution solution, which is a web-based solution where a pensioner can, in the comfort of his home or within his neighborhood, use a smartphone to confirm his aliveness or a computer system.
Here indeed, a live confirmation there. And before we wrap this edition of Business Express, I would like to inform you that all attention is on Lagos this Tuesday as the International Monetary Fund, the IMF, puts out a breakdown of the regional economic outlook for sub-Saharan Africa, and that will be coming in Tuesday in Lagos. And also in Lagos, the Central Bank of Nigeria will be giving us updates of the RT200. Nigeria is trying to ensure that her foot stands firm in the export of business with the AFCFTA. Business Express returns tomorrow at 9:30 a.m. Remember to send in your comments, questions, suggestions, and observations. Also be informed that all previous episodes are available on YouTube on the NTA's channel. My name is Leah Katung Babatunde, wishing you a fulfilling evening, and God bless Nigeria.